So last week was really good. We made a comeback for crypto. We made a comeback for stocks, and everything was looking like maybe we have a recovery. And this week, Monday, smacks you in the face like a can of beans, like boom. I don't know why I said a can of beans. I wanted to say like a brick in your face, but it is what it is. So the question is, why is everything retreating? NASDAQ specifically, those are where most of my stocks are, high growth tech stocks, down 2%. Why? CPI data, I'm gonna cover it on this channel live on Wednesday. This channel, and actually all three of my channels, is estimated to be coming in somewhere between 8.8% to 9%. Last CPI, Consumer Price Index, came out and it was 8.6%. This was higher than the previous one, which was, I believe, 8.1, and the one before that was 8.3. So it went up, down, up, and right now it should go up even more. After that, at the end of the month, we have the FOMC meeting, which we won't have next month. It's going to be the last one, and then we have another one in September. And I believe that they're going to be raising the federal funds rate by 75 basis points. Some people are saying, no, it's going to be 50 basis points. I really hope it's 75, because I do believe it's priced in, or that's going to be like the final da-da. I think next month the inflation is going to start going down. That's what I'm feeling. Could be completely wrong, could be right. Nobody really knows. But the reason why everything's going down right now is because of the inflation and the estimated inflation that is going to be that 8.8 to 9%. I was giving it some thought. Also why one of the reasons why there's such crazy prices on foods and goods is because of all the shoplifting. I just realized that. I was talking to somebody and I'm like, yo, there's like a lot of people are just robbing stores. And a lot of people are going to say people are robbing stores because they needed to live. And some people are like, oh, that's okay, it's not a big deal. But when you're going to the stores, besides for having to wait 20 minutes for somebody to unlock the freaking deodorant or ice cream, but you're paying a lot more money, because at the end of the day, it's about profit margin. So if the stores are being robbed, nobody's compensating them for that. So they need to charge more money on goods and services. So if you want to reduce the price of goods and services, I have a great idea. Put people in mother effing jail and make sure that they're not scared to just go shoplift. That's the problem. One of the problems. One of the easiest ways to reduce inflation right now is to prosecute people for shoplifting, because shoplifting right now is literally a career that people are doing. They shoplift and then they sell it right outside the store at 50% prices. I didn't know that, but I spoke to a lot of people that are like, Adam, why don't you just buy off the street? People are literally going into stores, stealing shit and selling them outside under the pretenses that they need this to survive. And nobody's prosecuting them. So why would they go work? Why would they not keep robbing? But at the end of the day, people don't understand. This eats into profit margin. So what do stores need to do? They need to charge more money for the same goods and services. So it's not only about actual inflation, it's about they're losing money because they're getting robbed. So if you want to reduce goods and services, start prosecuting people. Gas, of course, there's not much we could do because we're at capacity for refineries, but you could squeeze the prices down. I made a video about that yesterday. It is what it is. So what do I think is going to happen? I think the CPI report is going to come out hot unless we have some miracle. I've been saying this for quite a while, but I do think that the next CPI report and the report after that are going to start going lower. Why? The current CPI report, even though we're getting it in July, is actually for June. So it's lagging 1 month. It's a whole 30 days lagging. And because it's a lagging indicator, you're not going to see the benefits of what's happening right now, current conditions, commodities, raising interest rates, things like that, until next report. So I believe that in August, we're going to be seeing a reduction in inflation, and which means we might get a reduction in inflation in September. And the September Federal Open Market Committee, I am feeling very optimistic that they're going to only raise interest rates by 0.5% or maybe 25 basis points, because we're going to see that inflation is starting to go down. Now, when I say optimistic, I really mean that. I'm not on hopium. I don't think it's a 100%, but you have to try to make projections. You have to try to foresee what's going to happen. And that's what I think is going to happen. I honestly think that inflation is going to start going down in the next few months, but I think that this one is going to be red hot. Guys, I am going to be doing it live on this channel. Subscribe to my channel. I have a stock channel, I have a crypto channel, I have a real estate channel. I have all three if you guys like this type of stuff. Thank you so much for putting this channel over 1,035 subscribers. I am monetized on Adam Bergman's Moneymakers. And if you're watching this on my other channel, which is Adam Bergman Show, thank you so much. I just crossed 12,000 subscribers. 12,000 subscribers. You guys are absolutely unbelievable. And I'm growing my channel in this crazy recession. This reminds me of when I started my business 19 years ago that I left to do YouTube right now. I started it during 2008 at the financial collapse of the world. Sick. Now, it's not only America that's raising interest rates, all over the world, European Union, Asia, Africa, everybody's raising interest rates. This is what's happening right now. Everybody's battling inflation. Inflation is not unique to America. And rising prices of everything is going up literally everywhere. We're going to see what's going to happen. I'm just giving you guys the update, and I do believe that in the next 4 to 10 months, this recession is going to turn over. I don't think that we're going to have a super prolonged recession that's going to last years. I think that we're going to have a normal recession that's going to last right around that 10 or 12 month range. We already have 2 negative quarters, which means we have negative for 6 months. By the time we're going to get the GDP numbers this year, this month, we're actually going to be in it for 7 months. So I do foresee that we're going to have somewhere around, 4 to 6 months more of the recession, and then the market is going to start turning around. So someone's going to say, Adam, how is this possible? We can't increase gas. That's okay. A lot of people are going to lose jobs. A lot of people are going to lose jobs. Because they lose jobs, they have no money to spend. I'm sorry. I'm not being a douche. I'm just giving you guys the 411. This is exactly what the Federal Reserve wants. This is exactly what the banks want. And believe it or not, this is exactly what your neighbors want. They want people to, they don't care. People don't care about other people, unfortunately, as a whole. You just want your prices to go down. How do you do that? You need people to get fired, because then they have less spending money. When you have less spending money, all this, we can't lower prices, that's bullshit. You could lower prices. People don't want to lower prices because they want to make more money. But when people can't spend money, they're going to lower prices, and they're still going to make profit margins. So that's what's going to end up happening. That's why prices are going to go down. When that's going to happen, the Federal Reserve is going to say, oh, okay, inflation is going down, and then they have an option. They can go full throttle, keep going hard. They can take their foot off the brake, or they could do nothing. Reduce interest rates, raise interest rates, or don't do anything with interest rates. I really hope that they don't reduce interest rates. I hope they don't do anything or raise interest rates by a smaller amount, let's say 25 basis points. And these things is what's going to cause a rally, and this is actually what's going to start getting us out of the recession, right? Because you raise interest rates to reduce inflation, and you raise them as long as you have a strong labor market. But once you don't have a strong labor market, it's going to be very hard for you to raise the same interest rates. Why? This is then going to in turn cause a recession, which is very interesting because we're raising interest rates during a current recession. Usually we raise interest rates when there is no recession, but there was no actual recession stated. So we're only going to find out about this recession at the end of this month, and that's why I think we're going to raise interest rates a little bit longer, and then the Fed is going to say, you know what, we literally cannot raise interest rates anymore, because we're going to then cause a super strong prolonged recession, which is not what we want. So that's my take on it, guys. Not a financial advisor. Please subscribe. I greatly appreciate it. Thank you, and have a great day.